If you own a business, there's a few things to consider before you put yourself on payroll. The main thing is going to be how your business is structured. So if you're set up as a sole proprietorship or an LLC, most of the time you are not allowed to be on payroll. You can still pay yourself from the company's income. You can do disbursements and make estimated tax payments on those amounts. But again, you can't be on payroll. You can't be taking W-2 wages. You will be taxed self-employment tax on the net profit of the business each year, which is about 15%. And then a good thing to keep in mind is to try and make those payments on a regular basis rather than just sporadically or as needed. That'll just help with accounting to make sure that everything is, easy to predict as far as business costs go, and there's no surprises on your accounting side, but it's not a requirement. The next type of business setup is a corporation, and this is complete opposite, where business owners who are considered officers have to be on payroll. So you're going to be paying the regular payroll taxes on those wages, but the amount that you pay yourself can be deducted as a business expense when you file the company taxes. Next is an S Corp, and with an S Corp, you have to put owners or officers on payroll, but you can also do tax-free distributions, which is great, right? You can pay yourself tax-free money. But the key to that is, in addition to those tax-free distributions, you have to be paying yourself W-2 wages, and those W-2 wages have to be considered reasonable. There's no set definition for what reasonable is. So what we would suggest is to imagine that you're going to put a job ad out to hire someone to replace you and do the work that you do. What would you pay that person? That's a good rule of thumb as far as what the reasonable salary would be for your position. And then lastly, we have an LLC. And in an LLC, or limited liability company, the IRS is going to automatically define you as a sole proprietorship if there's only one owner, or as a partnership if there's multiple owners. So you'll be subject to, sole proprietorship, partnership rules. But if you are an LLC, you can elect S Corp status with the IRS, and we suggest doing that when the business is making about $40,000 a year. Slightly complicated if you're if you're a sole proprietorship or partnership, no payroll. If you are a corporation, yes, payroll. S Corp, yes, payroll. LLC, no payroll, unless you elect to be taxed as an S Corp, in which you're required to do payroll. Hopefully this is helpful for you. If you're starting a business and want some help, just reach out to us. We'd be happy to talk with you. Please like our page and follow us on Facebook.